My name is Waffles, and I'm a government whistleblower turned political commentator, and this is a brief economic update. So I am needing to divide out my broadcasting because my reports are getting too long, and I think it will make it easier for people to access content if I start dividing these segments out instead of doing like an hour and a half long video every night. So here are the top economic updates for the United States for the past 24 hours. Today is November 23rd, 2025. It is 1:44 p.m. Mountain Standard Time. Liquefied natural gas, LNG, export dominance and vulnerability. The U.S. has exported a record 98 million metric tons of LNG in 2025, equal to 25% of global LNG exports so far. However, two key risks were flagged. The vast majority of U.S. LNG exports flow to Europe, 2/3, and B, the U.S. share of LNG exports going to Asia, the largest import region, remains very small, 8%. Making U.S. exporters vulnerable to demand shifts. Implications on the economic side. The strength is clear. U.S. export growth in a strategically important energy sector, but the risk, heavy contraction of destination, Europe, could mean a sharp drop in export volumes if European demand fails, e.g. due to shift to renewables. From a policy and oversight perspective, how well is the administration tracking these dependencies and preparing for a possible downturn? Are taxpayers or government-backed infrastructure guarantees aligned with the risk? Heavy flows into tech stocks despite vulnerabilities, according to Bank of America's weekly flow note. November 21st, 2025, U.S. tech stocks are projected to hit a record $75 billion inflow for the year. The report showed $4.4 billion net flow into tech in the week to Wednesday. Implications. This is a major sign of investor appetite for U.S. growth and tech leadership. On one hand, positive for capital markets and corporate investment. On the other hand, it raises concerns over valuation, sector concentration risk, and whether underlying fundamentals justify such flows. From the accountability vantage, regulators and policymakers should monitor whether market exuberance is masking structural risk. For example, whether the administration's trade or industrial policy moves, e.g. support for tech or tariffs on inputs, are inflating valuations beyond sustainable levels. Markets reacting to economic and trade uncertainty. The broader U.S. markets, S&P 500, Dow, NASDAQ, ended sharply higher as of November 21st, 2025, with optimism around a possible central bank interest rate cut. Report polls show indices up about 1% on that day. Implications. A positive market move suggests investor optimism, but it also highlights how sensitive markets are to policy and trade expectations. If trade tensions escalate or tariffs increase or data disappoints, the upside may reverse quickly. From a public interest lens, strong markets are good, but if they rely on optimistic assumptions about trade, liberalization, or cost of capital, that may be vulnerable. Then citizens and policymakers should be alert to the downside. Analysis and accountability lens. Although none of the stories involve a new large government trade report or major tariff shifts, in the last 24 hours they show that trade, exports, and investor flows remain live with structural vulnerabilities. The LNG story is perhaps the most substantive headline for trade. While it shows U.S. export strength, it also reveals heavy dependence on the region, Europe, and weak diversification, which could mean a policy shortfall if export demand shifts. The administration has promoted the U.S. as a global energy exporter. Scrutiny is needed. Are diversification strategies in place? Is there transparency in export contracts and infrastructure risk? The tech stock flow story raises questions about whether economic strengths are broad-based or concentrated. If policy or trade risks materialize, e.g. increased input costs from tariffs, supply chain disruptions, those inflows could reverse and drag the broader economy. The strong market reaction shows intertwined investor sentiment is with U.S. trade interest rate expectations. That means trade policy decisions like tariffs and export controls have indirect but real economic effects beyond visible flows. What to watch? Look out for new trade data releases on imports and exports as well as trade balance in the next 24 to 48 hours to see if there's any shift in flows or tariff impact. Monitor announcement on any new tariffs, export controls, or trade agreements, especially in sectors like energy, tech, and manufacturing, because these can quickly shift economic outlooks. Keep an eye on investor flow updates, especially if tech becomes over-concentrated and vulnerable to a rotation out of growth into more defensive sectors. Watch for U.S. government disclosures or policy moves concerning LNG, infrastructure, export contract diversification, or risk management of heavy destination concentration. U.S. LNG export surge and concentration risk. Reuters published a time-stamped report on November 21st detailing that the U.S. exported 98 million metric tons of LNG so far in 2025. 25% of global exports. Verified risks include heavy dependence on Europe, weak penetration in Asia, record flows into tech stocks. Verified U.S. market had strong gains, rate cuts hoped. U.S. markets desk published reports at Reuters on November 21st confirming a strong day for all three major indexes. They've been fluctuating heavily. Market activity is very strange right now, and I feel like what I have been observing with the stock market reflects likely market manipulation going on, because every time it has major losses, it also makes up the exact same amount in gains in approximately 1 week from those losses. Treasury Secretary Scott Bessent says U.S. economy no recession risk despite $11 billion shutdown loss. Bessent told NBC that after a 43-day government shutdown, which he said cost the economy $11 billion, the U.S. economy remains on solid ground, citing easing interest rates, tax cuts, and lower energy prices. Implication: a strong public message by the administration that growth is intact. But this raises questions about transparency and cost of estimation. Why are they trying to hide economic numbers? Scott Bessent is not somebody who should be trusted as a reliable source of economic information. He is a Trump loyalist and full of shit. For those of you who are not already familiar with who this person is, this is Scott Bessent. This is the weasel that's been lying to the American people about the state of the economy. This weasel right here. Just making sure we know who we're talking about when we're talking about these things. Yeah. So, implication: a strong public message by the administration that growth is intact, but raises questions about transparency of cost estimation and sustainability of growth, and how much of the economic resilience is due to policy versus cyclical tailwinds. All of this is happening after the Trump administration utilized the government shutdown to conceal economic data, vital economic performance data, to include jobs numbers and other information. That reports have not been made because of the shutdown, which was probably done with criminal intent and on purpose to deceive the American people. So when it comes to what the weasel man Scott Bessent has to say, we don't listen to a damn thing coming out of the motherfucker's mouth, because it's all probably a lie. U.S. trade deficit narrowed sharply in August. Imports plunged. That means that goods are not coming into the United States. Imports plunged because of Donald Trump's tariffs. Because of Donald Trump driving inflation on anything coming into America from outside of America, be it groceries, clothing, furniture, whatever the hell it is, you're gonna pay more because Donald Trump has introduced tariffs on half of the planet. Yeah, so anyways, Donald Trump has put tariffs on literally half of the planet, meaning that he is literally trying to make money, steal money, take money, extra taxes off of literally half of the planet, half of the goods going through half of the planet. He wants money off of half of the planet's goods. Imports have plunged. Americans aren't buying shit because literally everything that's coming into the country, damn near everything, Donald Trump is trying to pinch extra off of. And it's making it so nobody can afford to make a living. But I really want people to think about what is happening here, because there's a whole planet and Donald Trump is trying to tariff half of the planet. What does that mean that Donald Trump is doing? How much money is Donald Trump getting? What does that mean for the global economy if Donald Trump, one person, is tariffing half of the planet? Sounds like global scale fraud that he should be held accountable for. That's what I think about that. So yeah, anyways, imports are what are being tariffed, and imagine that imports have plunged. Exports flat. According to Commerce and Census data cited by Reuters, November 19th, the trade deficit shrank 23.8% to $59.6 billion in August, mainly due to a 6.6% drop in goods imports to $264.6 billion, while goods exports slipped to 0.3% to $179 billion. Implication on its face, a narrowing deficit lifts GDP since net exports contribute positively, but the drivers are weak. Import demand pointing to softer consumption. People are not buying shit because everything's too expensive, because Donald Trump thinks that he needs to pinch a significant amount, 30% or more, off of damn near fucking everything. Pointing to softer consumption. Or business investment rather than a strong export rebound. The administration's tariff-driven import suppression may show up as improvement in the deficit, yet could signal deeper weakness. Yeah, money is not flowing. Nobody's buying shit. Everything's too expensive. Nobody can afford to live. Businesses don't know how to plan. Markets climb on rate cut hopes and economic optimism. U.S. markets rallied as expectations of a near-term rate cut by the Federal Reserve increased, and commentary such as Besant, that is the weasel that we don't trust. Besant's reinforced optimism, his lies in regards to the economy so that they can manipulate the markets. Reuters market coverage shows the S&P 500, Dow, and NASDAQ all had solid gains. Implication: the market's positive reaction may reflect policy optimism, tax cuts, trade moves, and rate cuts, but also creates a vulnerability. If trade policy or economic data disappoints, sentiment could reverse. From an accountability standpoint, the administration's messaging matters for markets. Are the assumptions underlying the optimism credible? Here's what the market has been doing since Trump got into office. I don't think that we can expect that to change. I don't think that we can expect stability. It is incredibly volatile. And when it comes to speculation, everybody's in a frenzy whenever the Trump administration lies to people. And then the moment that the lies start manifesting as the lies that they are, shit tanks. So that's all that the stock market has been doing since Donald Trump. It's not stable. It's not growing. And if you're going to have a bunch of people who are broke as fuck taking out loans while the economy is tanking, which is what is really going on here, then there may be a very small period of temporary relief if they're going to cut interest rates. And those people who are stupid enough to take out loans during that period of time, they are going to be the ones that are going to get screwed long-term financially. Because they're going to be driven into a hole that they can't get out of. That is not a fix for the economic state that we're in. You want to know how to fix the economy? I'm going to tell everybody watching, which is probably one or two people, how to fix the American economy. It's very simple. Get rid of the fucking tariffs. Tariff and trade policy linkages. The narrowing deficit largely stems from falling imports, not rising exports. Given the administration's focus on tariffs and trade wars, this raises questions. Are the import declines structural, weaker demand, or deliberately included? Tariff suppression tracking future import categories and business investment data will shed light. Growth attribution versus risk. The administration attributes resilience to tax cuts, rate cuts, and trade deals. Taxes are not being cut when you're tariffing fucking everything. That's not a tax cut. You can cut taxes over here, but if you're charging us extra taxes that we would not be paying otherwise with the tariffs, you have increased taxes. There has been no tax cuts. Any speaking of any tax cuts is untrue and is a lie, because we have increased taxes due to the tariffs. Rate cuts and trade deals, but does this hold up under scrutiny? E.g., the $11 billion that the American economy lost due to Trump and Mike Johnson's shutdown in order to conceal the Epstein files and get away with additional financial crimes. The shutdown cost figure needs supporting detail. If growth is fragile, what happens if a trade shock hits? Market reliance on policy optimism. With markets rallying, there is a signaling risk. If policy fails, tariff escalation, inflation rebound, global slowdown, the strong market response may amplify downside. Regulatory or congressional oversight should track policy commitments and trade deal follow through. Export performance remains weak. The flat goods exports highlight that U.S. exporters are not gaining momentum. That is people shipping out. So with the tariffs, ideally, what would be happening if this was an effective policy would be that Americans would be sending things out of the country to get their money instead of bringing things into the country. The United States is the world's largest consumer economy. We are not structured to suddenly become a massive exporter. We do not have the manufacturing facilities to do that. We do not, if he's going to tariff metals, chips, other things that are needed for manufacturing, we cannot manufacture goods if we cannot afford the materials that we need because of the tariffs. Therefore, the American economy is set to tank because Donald Trump thinks that he deserves to pinch off of every product coming into the United States. We are a consumer-based economy. We have been the entire time I've been alive. Sure, we could try to change to be an exporter, but I don't think that thinking that when we don't have the facilities or the materials here, suddenly flipping a switch and expecting everybody to suddenly change their entire business structure overnight is a realistic way to handle things. Export performance is shit, okay? Export performance remains weak. The flat goods exports highlight that U.S. exporters are not gaining momentum despite policy rhetoric. This warrants monitoring of export sectors, capital goods and services, and trade partner behaviors. The prolonged government shutdown has created significant data gaps in U.S. economic reporting, complicating the Federal Reserve's decision-making, making it easier for individuals like the weasel Scott Bessent to lie to the public about the state of the economy. There was an article recently reported in the Financial Times which reports that key releases, including Q3 GDP and September inflation, have been delayed due to disruptions from the shutdown. The lack of fresh data raises uncertainty for markets and for the Federal Reserve ahead of its December meeting. Why it matters: the absence of timely economic data increases risk for policy mistakes. Sluggish or no data means the Fed and markets may misread inflation, employment, or demand strength. This affects transparency and accountability of monetary and fiscal policy. And you know that the idiots out there that are not really paying attention, I don't understand why people are buying this bullshit. I don't get it. I am surprised by the fact that the stock market has been moving at all. I kind of think that Elon Musk is just dumping money in and taking it out and manipulating the market to make it look like there's action, because I do not understand how anybody who is watching the markets at all could feel motivated by things like a rate cut. I don't understand why people would think that something like that is good for the economy when none of us can afford to live, and the president is literally stealing from all of us by taxing us through tariffs on fucking everything. I don't get it. I'm assuming that's their motivation, is to confuse people who don't understand big words by lying through their teeth in whatever economic meeting they are going to have in December without the appropriate data being available. Anybody who's buying into that shit is stupid as fuck. Here are 4 more recent U.S. economic updates. Global PMI, S&P Global Flash PMI, manufacturing slows while services hold up. The U.S. manufacturing PMI fell to 51.9 in November, down from 52.5 in October. The services PMI Flash estimate was reported at 55, up from 54.8 in October. Implications: manufacturing remains in expansion above 50, but momentum is weakening. Inventories rising and new orders slowing. Services still showing strength, but cost pressures, input and selling prices remain elevated. From an accountability frame, manufacturing weakness may reflect policy and trade input cost burdens, tariffs, supply chain disruptions, and signals risk that broader economy may follow if services falter. Full PMI release would be something to keep an eye on, with employment and sub-index in detail, business investment and cap goods data to see if manufacturing softens, flows through. If manufacturing softness flows through. Consumer sentiment at very low levels. People don't want to buy shit because they're broke as fuck and can't afford a damn thing because Donald Trump feels like he needs to pinch off of every fucking purchase we're making, stealing money from the American people through extra taxes via the tariffs. Consumer sentiment at very low levels despite a slight November bounce. The University of Michigan survey data shows the overall consumer sentiment index at 51.0 in November, down from 53.6 in October. The current economic conditions component sank to 51.1 from 58.6, while expectations edged to 51.0. That's according to the Survey Research Center. Household mood remains weak, especially concerning given consumption is 2/3 of U.S. GDP. Persistent high prices and weak income growth are squeezing confidence. The data reflect lower and middle income households are particularly stressed. From an accountability stance, if the administration is promoting economic strength but households feel weak, there is a mismatch worth following. What to keep an eye on: actual retail sales data from November, December, early Black Friday, Cyber Monday indicators. Please don't buy anything. Okay, if you're going to go out and do a bunch of Christmas shopping, then what you're doing is you're giving Christmas to Donald Trump to buy more fucking weapons to use against the American people with. That's what you are doing if you are going to buy garbage that you don't need while these motherfuckers are taking the economy and taxing us through tariffs. That money is not allocated. It can be used for military expenses. And if you go out and buy a bunch of bullshit that nobody wants or needs because you feel obligated to because we live in a consumerist society, then what you are actually doing is you are fueling the war machine that may possibly be used against the American people. As we can clearly see, this president certainly has a high interest in attacking America. as indicated by the mobilizations of the National Guard and ICE against the American people, as well as the extraordinary budgets for these divisions. Please do not buy shit. Make something. Make a pie. Make a cake. Make a little doll. Don't buy garbage that people don't need just to feel like you are belonging to some sort of tradition when there is no tradition. This country is only 250 years old. What you may perceive as tradition is only destructive behaviors that have been put in place by a bunch of colonists who are unable to survive because destroying everything you touch is not sustainable. There is no way that we've always done it when the country is only 3 generations old. If an average person lives to be about 70, this country is only 3 lifetimes old. There is no such thing as tradition, and this whole thing that we believe is Christmas is a load of consumerist horseshit to get you to give all of your money to Jeff Bezos. Okay? Don't do that. If you care about your safety and your well-being and don't want to see the president attacking the United States, maybe you should just boycott and not give all your money to assholes for shit you don't need that people are probably not going to use and throw out anyway. Show people you care about them by investing your time into them instead. So yeah, Black Friday and Cyber Monday are supposed to be indicators on whether policy, taxes, and benefits is adjusted to address consumer weakness. Holiday shopping spotlight and consumer spending under pressure, according to Reuters, with many data releases delayed due to the shutdown. Donald Trump is trying to conceal economic data because he knows that he's defrauding the American people and the world. Markets are now watching Black Friday and early holiday sales as a proxy for consumer strength. Implications because official economic data is spotty due to federal data gaps caused by conspiracy against the United States in the longest shutdown that has ever taken place in American history. Due to the federal data gap, private signals from retail and holiday sales become more important, increasing risk of misinformation, overinterpretation, or surprise misses. Weak holiday spend could signal underlying demand softness. Strong spend could mask supply chain or cost pressures. What to watch: early retailer earnings, November, December, consumer credit trends, coupon dead stock indicators, and any administration actions to stimulate holiday demand. There should be no holiday demand. We should all stand together as American people and say, fuck this shit. I ain't giving this asshole my money. Manufacturing inventories hiking and demand softening. The Reuters piece also highlights that in manufacturing, new orders are slowing and inventories of unsold goods are reaching record highs. A high inventory level suggests factories may cut back production soon, which could flow to a weaker jobs outlook or capital expenditure reduction. For public safety and policy risk, if industrial capex drops, states and localities reliant on manufacturing jobs and investment may face a sharper decline. And remember, kids, the stock market is not the economy. Just because the S&P 500 or Dow Jones might be performing does not mean that wages are growing, jobs are secure, inflation is under control, or that people are thriving.
So the Olympics is great. And Johnny, for the others, you know, the World Cup, Johnny is the head of it. We had our top people, Wasserman. They all came in on the Olympics, and then I saw Johnny. And we got the World Cup, too. And, you know, it's only because they rigged the election that I'll be your president representing you there. You know, I got both of them. I got the Olympics, and I got the World Cup. And I said, you know, it's too bad. One was in 2026, and the other was in 2028. And I said, I won't be there. I won't be your president. But then they rigged the election. And now we won, so I'm going to be your president for the Olympics and for the World Cup. So, Johnny, thank you for the World Cup. And everybody, thank you for the Olympics. We're going to have a great time.
Hey guys, don't forget to like, share, subscribe, and comment on my videos. And also, don't forget to check out my shop where you could get this awesome Real Patriots Punch Nazis t-shirt. America, fuck yeah! And if you go to the link tree in my bio on most platforms, it's got links to everything, all of my stuff. You can find my shop there. I'm on eBay. You can also get this cool Exterminate MAGA sticker, cause MAGA's fucking cockroaches. And fuck MAGA, abolish MAGA, fuck you MAGA.